Now, the cash book. What is cash book? From that word, cash book, it means an account. It is an account which involves both cash you have on hand and the cash the business has in bank. That means all type of different cash, the one the business has on hand and the one it has in bank, they are all recorded in what? In an account known as the what? Cash book. So this cash book involves both the cash and bank account of the what? Of the business. So both the what? Cash and the bank account of the business, they are recorded, all these transactions are recorded in what is known as a what? A cash book. We are going to look at the three different types of cash book. There is the 1 column, there is the 2 column, and there is the what? 3 column cash book. So the types of the cash book we will look at, types of cash book we will look at 1 column cash book, we will look at 2 column cash book, and we will look at 3 column cash book. Now, what's the difference between the three, you may ask? This one involves only amount. When we draw the what? When we draw the cash book, you're going to see it involves only the amount, date, particulars, folio, and amount on both the debit and the credit. This one involves, instead of the amount, we are going to have the cash column and bank column on both the debit and the credit side. That is the difference. Therefore, this one, an additional column, including, apart from these two, will also be here. An additional column known as discount allowed and discount received columns. So that is the difference. This one involves only amount. This one, 2 column, involves, instead of amount, cash and bank column. That means on the debit side, cash and bank column. On the credit side, cash and bank column. Then this one involves both the cash and bank column on the debit and credit. Then on the debit, you will see what is called a discount allowed. This is usually, they call it a memorandum when we get there. Then this also is called the memorandum. Discount received is always on the credit. This one is put on the debit because this is an expense account. Let me repeat. Discount allowed is recorded on the debit side of the what? 3 column cash book because it is what? An expense. But discount received is recorded on the credit side of the what? 3 column cash book because what? We are receiving. It is an income. So please take notes. Difference between the two. So this one involves both this and this, and also this and this. So let's start with the 1 column cash book. We'll look at different what? Examples. Now, let's look at these various transactions that occurred in the books of what? Olumide Enterprises. Now, the following transactions were entered in the books of what? Olumide Enterprise. January 1st, received 5,000 naira from what? A debtor, James. That means James was indebted to Olumide Enterprise. He's now paying his debt what? 5,000 naira. January 5th, paid 2,000 naira to who? John, a creditor. That means money is going out. 2,000 naira. January 6th, received proceeds of sales 15,000 naira. January 7th, paid wages and salary. How much? 5,000. Then January 10th, collected dividend for money invested in the company. 12,000. That means Olumide Enterprises was also investing, and they now got what? An income in the form of what? dividend worth 12,000. Then they bought materials, they paid for the materials bought 5,400. The question was, this question now is draw up the 1 column cash book. Now, this is how you are going to draw it up. Dates, particulars, folio, amounts. Here also, you can make 2 lines. Dates, particulars, folio, and amounts. Now, from this place to these 2 lines, you can see 2 lines demarcating. This is the debit side of the 1 column cash book. Then from here downwards, this is the credit side. So please take note. Debit side starts from here, ends here. Credit side starts from here, ends here. Then your naira sign. Now, the trick here is when money is coming in, that means Olumide Enterprises is receiving cash or proceeds, it will be debited. But when money is going out or is making payment, it will be what? Credited. So money coming in, debited. Money going out, credited. Let's start with the first one. January 1st, received 5,000 naira from who? A debtor, James. That means money is what? Coming in. When money is coming in, I told you it will be what? Debited. Very good. Will come January 1st. Particulars, what are we going to write? James. We are going to make reference to James because the other corresponding credit entry in the ledger will involve the name of James. And what kind of ledger is that? Personal ledger. Remember I told you personal ledger, debtors and who? Creditors. So this one will come under the debtors ledger and the corresponding entry is here in the cash book. And how much did you receive? 5,000 naira. Let's go ahead. Paid 2,000 naira to who? John, a creditor. Money is going out. And when money is going out, I told you to be what? Credited. Will come January 5th. Who will mention the name? John. John. And how much? How much for John? 2,000 naira. Okay? Now, the corresponding debit entry, this is credit entry here in the cash book. The corresponding debit entry in John's account made in the personal ledger. Remember, personal ledger, creditors and debtor. This one is creditor, this one is debtor. Will be made debtor. I mean creditor in the debit what? Account. Debit side of his personal ledger. That's for this. But this one, who happens to be a debtor, since he is making payment, the corresponding entry will be made on the credit side of his debtor's account in the what? Personal ledger. Let's go to the next one. Received proceeds of sales 15,000 naira. Money is coming in. And when money is coming in, it will be what? Debited. Very good. So January 6th, we'll write sales. Why are we writing sales? Because the corresponding entry will be on the credit side of the sales account. And how much? 15,000. So we'll record it. Okay? Very good. The next one, paid wages and salary, 5,000 naira. Money is going out. Anytime you get that one, paid, money is moving out. Will come January 7th, wages and salaries. How much? The wages and salaries, 5,000. The next one, collected dividend for money invested in the company. Collected, money is coming in, so it will be what? Debited. January 10, dividend. How much? 12,000. Then the last date, January 15, paid for materials bought, 5,400. Money is what? Going out. Paid. Money is going out, so it will be credited. January 15, raw or materials. How much? 5,400. Now we are through with all the words posted. Now it's time to what? Find out our draw up our what? Balance. What do I mean? This plus this 20,000 plus this 32,000. We can do is what? A circle like this. Put 32,000. I will still tell you why. Come here, make a circle. This plus this 7 plus this 12,400. Now, why are we doing this? We are doing this to have a better view of where our balance will be. Looking at it now, the total of this debit side, 32,000, is greater than what? Total of the credit side, 12,400. And what kind of balance did I say that is? Debit or credit balance? Debit balance. So this is a debit balance. This cash book has a debit balance. Debit balance. So please take note. And it's not every time that a cash book will have a debit balance. There are situations where cash book will have a credit balance. We call that situation, maybe in the 2 column, we call that situation what? Overdraft. That means you will see a situation where maybe 2 column cash book, the total on the credit side will be greater than the total on the debit side. That is usually a credit balance and it is an overdraft account. Okay, looking at it, let's look for the difference. The difference between this and this, so 32,000 minus 12,400. This is our 0, 0. Remove 1 because this 0 cannot go here. Remove 1, put it here. 10 minus 4, 6. 1 minus 2, it can't go. Take 1 here, put it here. 11 minus 2, 9. 2 minus 1. So 19,600. That is our balance. We will now come. January 31st. Balance carried down. Please take note. Balance carried down means the closing balance. For what? For the month of January. And how much did we say? 19,600. It will now come. Everything must equal to this side. 32,000. We'll close. This means we have closed the account. We'll come here. 32,000. We also close the account. Now, we'll come to this next line. February 1st. This closing balance for January will be brought down in February as opening balance. Opening balance, that's why we have balance brought down. At times you may see it balance brought forward and balance carried forward. They are still the same thing, still the same language. The only thing, they are just using different terms. So it's still the same thing, carried down, carried forward, brought down, brought forward. We will not bring this balance. Why are we bringing it forward here? There will still be some transaction in February. Money coming in, money going out. So we'll continue from here. So this balances that was brought what? Forward from where? Brought from where? January to what? February. And every other transactions will be recorded for February under it. So that is it for 1 column cash book. Now we'll look at 2 column cash book. Illustration of 2 column cash book. Now, before we treat some questions on 2 column cash book, we're going to look at 2 important words, things: contra entry and what? Bank overdraft. Now, what is contra entry? As you can see, it is an entry made from the cash account to the bank account of the what? business or vice versa. Now this is just simply when fund or money is moved from the bank to what? To cash you have on hand. When the business needs cash for daily what? Transaction, it can move some it has in the bank and what? Have it on hand in order to take care of the what? Daily transaction. Or the business may have excess cash on hand that it may not need presently. So instead of what? Taking the risk of holding the what? Money, the cash on hand, or using the cash for something that was not planned or that is not relevant to the business. The business can decide to what? Pay that excess cash and transfer it to where? To the bank account. So this movement of cash from bank to what? Hand, or from hand to what? To bank account is what is known as what? Contra entry. Gotten it? Okay? Now, bank overdraft. This one, just as I told you when I was solving the one column cash flow, I told you when there is a credit balance, that means when the total of the credit balance is greater than total of the debit balance, they occur, that situation is what is called bank overdraft. And it occurs as a result of what? When you draw a bank account, overdraw a bank account. That means, for instance, if you have 5,000 naira in your account, bank account, but you withdrew, or the bank allowed you to withdraw, let's say 8,000 naira, that excess what amount in your account, which is 8,000 minus 5,000, which is 3,000, is what is known as what? Bank overdraft. Have you gotten that? Okay. Now let's look at example of a contra entry. Just as I said, we drew 500 naira cash from the bank for what? Daily transaction. Have you taken notes? So for daily transaction, withdrawal for daily transaction from bank to cash, or deposit from what? The one you have on hand and putting it in the bank is what is known as what? Contra entry. Now let's look at questions on that. Now, this is a transaction that involves recording or posting in the 2-column cash book. Now, let's read it. The following transaction of Mr. Bello for the year 1993. They said started business with cash with 80,000 naira in 2nd of what? January 1993. And paid it into the bank on what? 4th of what? January 1993. Now, this 80,000 naira he started business with is called what? Capital. Very good. So, the business is owing who? Is owing Mr. The business called the business is owing Mr. Bello, who is the owner, a liability called capital, and the amount is what? 80,000 naira. Now that amount was not paid into the bank on what? 4th January 1990. The bank of who? The business, not the bank of what? Mr. Bello. Now that means money proceed was gotten from the business to start with. And that proceed, when money is coming in, remember I told you it will be recorded on the debit side. Now before we do any recording, look at this format. You can see the format of a 2-column cash book. The date, particulars, folio, cash, no more amount, cash, bank. This 2 lines shows debit side started from here and stopped here, while credit side start from here, date, particulars, folio, cash, and bank. It starts from here and ends here. So let's start January 4th. Please, we are not going to use January 2nd because it didn't make any lodgement with the bank. He only made lodgement with the bank on 4th, so that is the date we are going to what? Put. And the particulars is capital. Capital because that is the proceed of the what? the initial money put in by Mr. Bello into the business and how much it was paid into the bank. So this is the cash column. We are not going to record it because money is not coming into the cash. It is coming into the bank, and how much? That is 80,000 naira. Now let's continue. His transaction for the rest of January 1993 are as follows. 5th January 1993, purchases by check. Money is going out. Will come on the credit side. When money is going out on the credit side, 5th 1993, purchases. How much? 27,300. Not here, but here. Check means bank, associated with bank. Payment by bank, 27,300. Okay, the next one, credit purchases, 25,200. Please, anything credit will never hit any of this side. Why? It doesn't involve cash or check. So this particular entry will be made in the ledger. It won't be made here. That is journal, sorry. If you remember our journal, what? When we're doing the day book and the journal, we told you any credit items will be recorded in the journal. So this will never come into the cash book because it doesn't involve any payment. The payment is postponed to the future. That's why they call it credit. So anything that involves credit is never what? Recorded or posted here. It is only things that what? When proceed is collected or when payment is made. That is when it is recorded here. So this will never hit this. Let's continue. Still on that 6th of January, electricity paid by what? Check, 500. Money is going out. Will come 6th. How much? Electricity, 500 naira by check. So we'll record that 500 naira. Then, still on 6th, he still paid rent by check. How much? 700 naira. We'll still come under it. Rent, 700 naira, still by check. Now, let's go to 7th of January. 7th January 1993. Sales by check, 4,000 naira. Money is coming in. 4,000 naira. So when money is coming in, debited. Will come 7th of January 1993. Sales. How much by check? 4,000 naira. Now, still on that same 7th January, he still also made sales. This time around, it's no more check, it's cash. How much? Cash of what? 4,500. Will still come, still in line here. 4,500. On the 8th of January 1993, he paid creditors by what? Paid creditors by check. How much? 15,100. Payment, money is going out. So we'll come 8th of January 1993. Creditors, that is by check, 15,100. Then on the 15th of January 1993, he drew cash for office use. Now this is the contract entry we are talking about. He drew cash. That means he drew cash from the bank and gave it to what? Cash on hand for office use. That means 2 entries will be made here. What are the 2 entries? Will come 15th January 1993. We'll write cash. How much? 200. Now, we'll put C here. C here signifies contract entry. Money is going out from the bank account. Because when you withdraw money from the bank account is given. And any account given is what? Credited. So that's why we put it here. And we write the corresponding cash account here. Then we will still come on the debit side. 15 January 1993. We'll write bank. We'll put C. C there signify what? Contra entry. We will now put it on cash here. What this means is money was withdrawn from this bank account, which is credited, and given to cash account, which is what? Debited. So that is the transaction for here. I will now come. Please, this folio column is known as a reference column. Please take note. Reference column. What do I mean? A ledger is usually a big book. Then, initially when ledger was introduced, the whole idea of ledger is a big book. And a big book that contains different pages. So those different pages are known as what? Are known as accounts. So it's just like this. Ledger is the big book. Then the accounts, the various accounts in each ledger are known as the pages on that big book. So please take note. The ledger is the book. The pages on each of those different ledgers is known as what? Account. So if you want to make reference, for reference sake, they brought out what is known as what? Folio. Folio now, they may put maybe PL13. Let's just say for instance PL13. What this record means is make reference to the private ledger, which is on page 13. You will see the capital accounts. Details of this record will be seen in private ledger, page 13, which is what? A capital account. So it's like a reference to make your work what? Easier. So that when you want to make reference that, okay, this record that is here, or this posting that is here, where is the corresponding entry? Personal at the private ledger, page 13. You quickly go to your private ledger, open it, page 13. You will see the capital account. You will now see this record here. So for what? Easy referencing sake. That is why they brought out what is called folio. Now let's record and balance all our accounts. We will now come. We will start from the cash column. This plus this will give you 4,700. This plus this will give you 84,000. We will now go to this place. There's nothing here in the cash column. Then this place here, we are going to record that. This 27,300, 500, 700, everything will give us 008 plus this 15, 28,500 plus 15,100 and 200, which will give us 6, 8, 13, 4. So this side will give us 43,800. Now, this entry, why all these things? To give us a view of where the closing balance will be. Looking at it, here on the cash column, we have 4,700. Here on the cash column, we have nothing. So that means our closing balance for the cash is a debit. Why? Because the total of this debit side is greater than the total of this credit side, which is 0. So we'll come January 31st, 93, closing balance under the cash column 4,700. Gotten that? Okay. Now we will now come to the bank column. Our total here was 84,000. Total here was 43,800. So we are going to do minus it. Looking at it, this debit side, total of this debit side is greater than total of this credit side. That means it is a debit balance. So 84,000 minus 43,800. 0, 0. Take one out, put it here. 10 minus 8, 2, 0, 4. So our balance here will be 40,200. We will now come, put this total 4,700 and this total 84,000. Also come here, 4,784,000. So the two sides are balanced. Huh? You can see total of credit. Then maybe definitely if there's no information that the business is going to what come to an end. We will now come February 1st, 1993. Opening balance for cash 4,007, for bank 40,200. So from February, if you still want to continue, if the business continues the transaction, it will all be recorded here. So that's it for 2-column cash book. The next one we're going to look at is 3-column cash book.